There are companies like MongoDB, it's a $26 billion company today. There's Snowflake, which is $60 billion company. There are companies like Hints and Hers, which came out of Atomic. There are companies like Dollar Shave Club, Food Panda, Talk IQ, Yelp, Aircall, Medium, Moderna. The list goes on and on and on. And yet very few people know that all of these companies actually came out of venture builders.
So a venture studio is still one of these best kept secrets because it has produced a number of companies like you described, but it works in a way that is unique and different from all the other things that you mentioned.
That myth is totally sort of debunked. Whatever media narrative has been set up that the only way to build companies is you go and do an angel round and then a series A, B, C, and the VC route is the only route to build companies. That is not true.
Everyone has an important role to play in the ecosystem, but the venture studio is a unique type of entity that can do many things that catalyze and create just innovation and new types of businesses very, very quickly.
There are people who somehow have not been given that opportunity or chance. They are basically in their 30s or 40s. They know one or two particular problems really well because they've spent like 10 years. And while our use cases are slightly, like 30,000 feet level and 10,000 feet level and 5,000 feet level, but this person, because of his domain expertise, comes in with a very, very niche problem.
Yeah, with a different configuration of capital and resources, we can help that person who is statistically more likely to succeed in many ways to be successful.
The questions that founders would have and even sort of later stage investors would have is, why should a founder part ways with 20-25% equity? It's a fair question to ask that, why should you part ways with that much equity? Hello and welcome everyone. We are back with another episode of Build AI podcast. Now usually we talk to people who are building AI companies, AI builders. Today we have folks who are building multiple AI companies, and it's a very special one because Vijay is deeply involved with us at GI Ventures, and so it's going to be very interesting when we talk about the various aspects of venture studios, venture builders, and how we are kind of looking at things, but also what is the general perception in the market. There are lots and lots of questions that investors, founders, people have. With this episode, we are also trying to educate and share our learnings from the last 1 year that we have been doing this. So Vijay, welcome to yet another episode of Build AI.
This is awesome. Thank you, Amit. I'm really excited for this episode. I've enjoyed all the really thoughtful conversations that we get to listen to on Build AI and that you host. And so hoping to, as you said, kind of peel the curtain back on what's happening in the world of venture studios and, kind of shine a light on that for everybody.
That's great. So I think it may be a good idea to start with a little bit of intro. Myself, Amit, I have built and sold a company in the Fintech space, Medici, and basically have been investing in companies. I've done about 30 investments. Some of them have done really well. And since last year, along with my co-founder and CTO, we started building GI Ventures. Vijay came in as an advisor first last year, and then he has come in full time and is basically leading us on. So very excited to talk to Vijay. And Vijay, if you want to just give a very quick intro about yourself.
Thanks, Amit. It's really, again, a treat to be here. I love working on the problems that we get to think about and with the technology and with the products that we have and looking at potential markets with exceptional founders, and that is a big theme throughout my career. So I've spent the last 25 years of being fascinated by new business models and new technologies and things that people can build, and have been of serviced entrepreneurial leaders when I haven't been a founder myself. So despite a couple of startups in fintech and e-commerce, I found my way to venture, spent 5 years at 500, became an executive coach focusing on the founders, as well as an angel investor. And then now I'm really excited to come back to venture studios and venture building, which is, as I can describe better during a conversation, has changed a lot since I started getting into that space about 10 years ago.
Great. Thank you so much, Vijay. I would like to actually jump in and ask my first question, which is, I realize that a lot of people in the audience may or may not know everything about venture studios and venture builders. So, I think a good place to start will be that, there are companies like MongoDB. It's a $26 billion company today. There's Snowflake, which is a $60 billion company. There are companies like Hims and Hers, which came out of Atomic. There are companies like Dollar Shave Club, Food Panda, Talk IQ, Yelp, Aircall, Medium, Moderna, and the list goes on and on and on. And yet very few people know that all of these companies actually came out of venture builders or venture studios. And, I think a good place to start, Vijay, will be if you can define what exactly is this structure and what is this model and how is it different from VCs and accelerators and incubators?
That's a great question. There are so many terms flying around and people use them very casually. It's very hard to distinguish between an incubator and accelerator, and then what is a venture studio on top of that. So a venture studio is still one of these best kept secrets because it has produced a number of companies like you described, but it works in a way that is unique and different from all the other things that you mentioned, particularly because a venture studio really starts at the inception stage. It starts at the idea stage based on either a thesis or the talents of an individual founder. And there is a phase of incubation where an idea can be tested, where product can be built, and where the market can be validated in order to then start scaling and supporting that business. And then on top of that, providing capital that allows it to go. If you just do the first few things, then you incubate, but you don't really. And if you come in later to business and help it after someone else has already created it, then you're accelerating. And if you only write checks and don't actually play a hands-on role in that business, then you are an investor. There's nothing wrong with being any of those things. I've worked at Accelerator. I've spent time in the corporate venture environment as well. Like, everyone has an important role to play in the ecosystem, but the venture studio is a unique type of entity that can do many things that catalyze and create just innovation and new types of businesses very, very quickly.
Right. I was actually fascinated by this model when I came across it just like 1.5 years back. It's not been long. And I played, I basically played both the roles of a builder and an investor for quite a while. And I felt like just being an investor was not enough. There's much more value creation I wanted to do. And when I came across this model, it was just totally fascinating, right? So same question to you, Vijay, like what attracted you to join a venture builder and start sort of building it?
Yeah. I think that ideation and being a thought partner to a founder who is the best person to go and build this business, but who would have to sometimes struggle and stumble on their own or with a co-founder for a while before they found exactly where to start and then maybe even later where to get product market fit. Like, playing that thought partner role is really important because it takes a certain set of skills in order to unlock what that person has and where their particular insights can take them, but also provide feedback and context to see new things. But it's not enough to just like think really hard. You have to do things. And so that's where I think like that hands-on role helps define the product and later produces the pipeline necessary for that company to achieve momentum and grow and ultimately become a business and not just a science experiment.
Right. Speed and momentum, I think, is very, very important. And Venture Builder provides that. Vijay, you and I hosted this very interesting session, in San Francisco, where we had a whole bunch of founders from different walks of life. Most of them were domain experts in their respective areas, from fashion to commerce to financial services to accounting. And they already knew a little bit, and there are more and more founders that we are talking to who want to know, like, what are the advantages of a venture builder for a founder? Like, why should they, like, they have many options, right? They can build on their own, they can follow the regular path of raising money from VCs and go through that path. Why should they even think about going and building with a venture builder?
Yeah, I think what you described is very telling. Even in a place where there is a high degree of talent density, like in Silicon Valley, you might have great mentors, and you might find passionate angel investors, and you might have a network of colleagues, peers, who could help you and even be part of your business and join you. But even if you have some of those things, the combination of all those things in a venture builder is really attractive, because what we have now is this really unique moment where, for the first time, non-technical leaders who have domain expertise and know something about any of those spaces, whether it's accounting or fashion or what have you, can build AI companies, and they can be the CEOs of technology businesses, because what we've done is created a process, and others have shown it's possible to not just vibe code but build real product in a short time that is ready for market and is accessible to your customers and can be enterprise grade very, very early. So I think collapsing the cost to build means everybody is going to move earlier in the venture ecosystem, but in particular, it creates this unique opportunity to do things quickly with exceptional people, and that's something a studio or venture builder is extraordinarily well positioned to do.
Right, that is so true, because I think what we realized last year when we started building our first AI product, Justella, that it takes significantly less amount of engineering resources and significantly less cost to build a company. But then, in my investing experience, I have seen there are a lot of people with 15 years, 20 years experience in banking, financial services, who would struggle finding a CTO or like a great technology team. It's so difficult to hire, right? Even in countries like or regions like the Silicon Valley and Bangalore and I guess they have great ideas. They understand the workflows, and this was one of the missing elements. And at Guy Ventures, we are offering that, and it seems like if you actually today understand industry really, really well, especially from those complex workflows and where the data resides, what integrations are there, and you have a lot of relationships and basically people in the industry, and if you are able to then build a solution to solve some of the problems that you have lived with yourself for a while, it seems like it's a pretty good way to build companies.
Yeah, if you look at what accelerators value, it's finding somebody who has a unique insight, who knows something that other people don't, who maybe have actually experienced the problem themselves, because that's the only way in which that person is going to have the ability to solve a problem and address it in a unique and important way. Now, if you take that experience that maybe somebody, most likely on the younger side, has experienced early in their career, and then you multiply that by decades, you either have people who accept the world the way it is, or others who are highly entrepreneurially minded, who are, still want a crack at making things better, or maybe this is their second or third startup. And now they're going after this opportunity with like just compounded knowledge and skills developed over time. And you and I have talked about how there's this disconnect between the data that tells us that the average unicorn founder is 38 and the pattern matching that Silicon Valley is attracted to, which is looking for, the proverbial 20-something founder in a hoodie who today, it might be X, Stripe, or Palantir, exceptional companies to have worked for. Obviously, a few years ago, that was Uber and Airbnb, and a few years ago, it was someone who had like clocked in a few years at Google and Meta. Right, and this will continue. And in 3 years, we'll be seeing alumni of another type of company, maybe OpenAI, right? And that's great, and that's a particular way to invest. But what we know is with a different configuration of capital and resources, we can help that person who is statistically more likely to succeed in many ways to be successful. And that's something a studio or a venture builder is uniquely able to do.
Yeah, that is so right. I mean, at least like one of the insights that I drew from my own investing experience of 30 portfolio companies that I have, a bunch of those people are actually people who worked for 10, 15 years in Visa or a bank like Barclays or something. And um, there are areas in financial services, especially because it's a regulated industry, there's compliance, there's so many things that once they were able to build a decent technology team and they were able to build a decent technology solution, there was no stopping them. And some of those companies have outperformed everything else. And it's funny that I've actually invested in about, my portfolio has about 9 YC companies, 6 of them I invested before YC. And one of the things I saw is that almost all of those cases, they want to pick up somebody who is in their early 20s or mid 20s. Um, and we know this very well from our investing experience that those are not the only companies which will become successful, right? There are people who somehow have not been given that opportunity or chance, that they are basically in their 30s or 40s. They know one or two particular problems really well because they've spent like 10 years. So for example, doing accruals accounting as an example, or basically looking at construction management industry and going very deep into that. And so they know the problem, they have the relationships, they know the complex workflows, and they know what has to be done to solve it. It's just that they never got to a point where they had a CTO or engineering team which could help them build that. And why
Yeah,
should they not have that chance, right?
of
It's like
course.
that question that we keep asking ourselves all the time.
Yeah, exactly. Like that, if that's all that's missing, what if we could do that? And what if we do that in a way that is, if not scalable, at least spreadable and repeatable across many different businesses? And that's what you get in a studio context. And I too have invested in companies that were later accepted to YC or have gone through 500 startups or a program like that. And they're great and they're led by wonderful people. And the ones that seem to be chugging along with the most momentum are ones where there was some industry experience and some knowledge of how to keep growing and scaling and be able to succeed. Because if you do come with many years of that industry experience, you have not just the ability to call the first 4 or 5 people on day one, but also you enter these high stakes environments with trust, with people knowing that you know what you're talking about, and that the risk of taking a bet on a startup, particularly in this B2B context, is actually much less than if you were dealing with folks that were learning as they were going.
Yeah. I would like to share an example from one of our own portfolio companies, Fast Tracker AI. that most of the times when we are going to and talking to RIAs, it's not really about the technology that they have a lot of questions. It's not even about like which LLM you are using, or like how many engineers do you have. The questions are actually around like how much do you know about financial services and regulations and compliance? Do you have SOC 2 type 2? Right? And how do you sort of manage the data in transit and at rest? Right? So those are the questions which actually have helped us to convert a lot of sales. And so as an example, in Fast Tracker AI, our founder has spent like 14 years in banks and financial services, 7 in the US, 7 in Europe and Asia. And so when he's talking to these RIAs, which are really financial services guys, right, and talking to them about what is our solution, why we have built it like that, and then it goes into questions around regulation, BE, and data and SOC 2 type 2. The answers are very trustworthy because they know that there's another guy who actually came from financial services. He understands the importance of managing customer data really well, and about end-to-end encryption and about security of all of this data, right? So that is something that we found very unique, that there are industries like financial services, healthcare, where I think it's not just about the solution, but it's also about who is selling it, how they are selling, and how it is being adopted.
That's right. So you have to be an industry native in many cases to even have the right conversations with people. And I think that's a good example.
Yeah. Now, as we always do, we want to be very honest to the topic, and also question everything, right? And provide an opportunity for people to listen to and get some of the answers to questions that they may have, right? For example, one of the questions that founders would have, and even sort of later stage investors would have, is why should a founder part ways with 20-25% equity in our case? I mean, there are venture builders, venture studios, which it all started with, like 20 years back with, studios like Rocket
Idea,
Internet and others.
Rocket Internet.
Idea. And then even till late, like there are many venture builders and venture studios who would take 50-70% equity. Our model is slightly different. We are trying to make sure that the founder has at least 50% equity at Series A level. So we are basically taking 20-25% equity. But even then, right, I think it's a fair question to ask that why should you part ways with that much equity?
Yeah, if you're a founder, you don't want to be diluted. And it's very natural to compare different options. So, as you and many of our listeners will be familiar, like if you are getting through an accelerator, you're probably giving up 7%, sometimes up to 10% equity in an accelerator program in exchange for some check of some amount between $100,000 up to $250,000, right? And so the question is, what else is in that? And so people should read these provisions very carefully, understand MFN clauses, understand, what happens if they don't raise another round, what are the types of investors they will need to go to downstream. All of these things matter a great deal. And the key thing is to ask ourselves, what do we want the future outcome to be, so that we are default investable and that we are default alive and even, dare I say, thriving, profitable, and growing, right? So what are the conditions to de-risk the business and push you so much further, right? And that's something that studios are good at, right? Similarly, what is it that you want the cap table to look like at Series A? And because that's a real inflection point for the company, because from there you're truly scaling and not just developing in the earliest stages. So if, as you pointed out, like you're still owning half the company at Series A, you're essentially getting to the same place, but just with a different approach, and maybe in less time, and maybe that allows you to win because you are ahead of others in the market and have built it more quickly. So I think it's a very good question, and every founder should have this conversation with a venture studio, with an accelerator, with an angel investor, and to understand, what are the things that are at the surface level, and what are some of the provisions underneath, and to ask themselves the question, what does this start to look like, in a couple of years?
Right. It does not matter where you start; it matters where you end. Right. So,
Yeah, very
I
true.
think that's yeah, and I think it might be a good idea to also sort of discuss what is our founder and idea selection process at GI Ventures. Because I think it's all of this is very different, and some of it is also very new, and we also figured out our own ways as well.
Yeah.
But one thing I've seen is most of the successful venture builders have a system. And I know that you have talked about it a lot with us internally, that
Yeah.
everything needs to work as a system, because you don't want people to sort of take decisions outside of that structure. So it's kind of important that we follow a system. So maybe we start there, and then we sort of bring it to what is our process to select the right ideas and founders.
Yeah, I'm glad you say that, because intuition is good, and when our gut feelings are informed by experience, that's really powerful, right? There are people who invest in a company because they just know, they believe, they have conviction. But where does conviction come from, right? Conviction comes from either like some overwhelming probabilistic analysis that this is going, that it's clear an outcome is going to occur, or in the absence of that, a great set of belief around a team, around a market and a product that you believe they're going to be exceptional and they're going to be successful. So if you look at it that way, then what we need to do in our jobs is to talk to basically a couple hundred founders a year. We will talk to a couple hundred individuals, all of whom are talented enough to be in conversation with us. And what we want to do is understand, are they people who have that unique insight and knowledge of a space? Are they ready to be founders? Do we have an idea about why they would be good for us to work with? And are they also, ready to take this plunge? And so we may filter that down from, a couple hundred to working with ultimately a handful of people a year. And then the key is to really try it out. What does it look like to learn quickly, to explore space, to build something together? And that's where we have a 4-week sprint process to start with an opportunity area, to look at how to analyze the market, to build some version of product, show it, get feedback, learn, figure out why something is a bad idea. That's really important, knowing what not to do. And then at the end of that, ideally having a design partnership or even a POC that would allow you to then say, okay, there's a first market here. It may not be the biggest market, may not be the final market, but there's a first market, and there is a path to that larger market that has, a $10 billion or more total addressable market behind it. And then from there, we want to make the decision to incorporate the business, invest at that stage, and subsequently, support the build out of the product, and eventually the transfer, serving ultimately as a technical co-founder to that startup founder.
Right, very well said. And some of the numbers are fresh in my head. Just to add to what you said, I would just like to share some numbers that we recently published investment thesis in a couple of different areas, and then we also used various tools like LinkedIn Jobs, etc., to reach out and get interest from potential founders. We got more than 150 plus applications, shortlisted that to about 25 plus, started having discussions with them, and then brought it down to a meaningful number. We actually met some of them in San Francisco last month, and then we have started a 4-week customer development program, or the initial program as we call it internally, with about 2 of them, and that's currently going. So that's how like our funnel works. And as I said, like, because there was an investment thesis, so we have these ideas or use cases defined in particular areas like AI in accounting, AI in lending, AI in various spaces, and then we would have a founder who got interested and attracted to this because they also have a similar idea or a problem solution set that they have been thinking about in that particular area. And while our use cases are slightly, like 30,000 feet level and 10,000 feet level and 5,000 feet level, but this person, because of his domain expertise, comes in with a very, very niche problem
Right.
that they want to solve.
And
Yeah.
their understanding of the landscape is at the grassroots level.
Yes, yes,
Yeah.
exactly. And it's very interesting, like how secondary research and talking to people versus actually spending 10 years in a particular niche, the difference that it makes,
It's
the
enormous.
product market fit that it can bring to the table,
Yeah.
right? So
Absolutely. I've spent years thinking about product market fit and how, it's about trying a whole bunch of things and then you just kind of get it. I've heard famous VCs say, "Oh, how do you get to product market fit? That's a kind of black magic," and we know that, you're crossing the chasm, you're doing different things to learn, but it turns out some people just come into a space and they're ready to win, and it's really exciting when you see that, right? And that goes into that unique development of conviction, because to devil's advocate here, if you're trying to attract people to build a company together, you might attract some people who are not the ideal folks to build with, but you try and see with this thesis approach, saying like, we care about this space, and you will find the person who is maniacally and unreasonably equally interested and or even obsessed about that space, and that person is going to do something extraordinary and move really fast. They're going to send out hundreds of emails in a week to try and get someone to take a call and demo a product. So like those types of outcomes are really exciting, and that's also not what we're trying to necessarily test for, but where we know these extraordinarily talented, high energy folks are, and we want to give them as many tools as possible to succeed.
Right. Vijay, you just said devil's advocate. I would also like to play devil's advocate for a moment
Yeah.
here. I've heard this argument being made by a couple of VCs. I was talking to that. Oh, you know what? Like, building startups is a very irrational behavior. Fires are burning, all the odds are against you.
Yeah.
So you need people who are not very rational, and usually these people are in their 20s. And I was like, hold on a second, like, is this like again pattern matching that they have to be in their 20s to be like that? And while, like, even myself, right, this is my third time I've started a new thing, and I don't feel like the person has to be in their 20s to be having that kind of passion and fire in the belly to start something. Um, and so, how do you sort of explain that? Because YC and a lot of people believe that people have to be in their 20s to,
Yeah.
to be mad and to be so passionate. Does passion is passion restricted to some age,
Yeah.
and is fire in the belly restricted to some age?
Right. Again, I'm reminded of like this old CB Insights T-shirt I had, which said this: data is greater than opinion. right? Like, and the data is that, um, the median age of a decacorn or unicorn founder is 38. The data tells me that you need to look at people who are doing stuff and not just talking about their passion. They're living that passion. And that might have been that they were starting multiple companies. It might have been that they were frustrated so much by what they saw in the corporate world that they decided they wanted to do something different. And they are so obsessed that they're willing to go out and ideate and collaborate and build and sell for the sake of giving this a shot. And so, passion is both like ideas, and it can be sometimes youth, but mostly it is like the energy that you bring to doing things.
Right. And we see all these very passionate people all the time, given that, we are talking to so many potential co-founders. So yeah, I completely debunk that myth that people have. In fact, another example is that I'm sure you know about this, right? Also is the interpretation of data, right? Like, who is talking about it and how much, like, for example, media always talks a lot about certain things, and so people believe that, that is a fact or truth. For example, during the World War, I think they analyzed, I think it was Japanese planes, or like, I don't remember.
Yes, the American bombers.
Yes,
Yes.
they analyzed that. Okay, which ones were surviving, and where were they
Yeah.
hit, and where were they not hit, and then they thought that because the ones which were surviving, the bullets were hitting a certain place, and so they said, like, we have to make it
Yeah.
stronger in those places.
Absolutely.
Turns out
Right.
that data was skewed because the weakest point was in the planes which were destroyed or brought down, and they had to look
absolutely.
at that data.
Yes, no, you're spot on, right? So it turns out when you have bullet holes through the wings of that airplane, it can still fly. Why? Because the engine is still, turning the propeller. And that's exactly what you need to reinforce, is keep that engine, flying the plane. And so, yeah, so this is a great example of what you're describing of survivorship bias. So yes, there is a lot of survivorship bias out there, and it's our job to separate signal from noise, to try and address all of our biases, of what we want to be true and what past evidence might be pointing us towards, but we have to ask ourselves what can be different now.
Yeah. I think just to summarize so far, right, what we have discussed, and then there is a couple of other things I wanted to discuss, and maybe you have some other points that we can cover. Just to summarize so far, so basically, three of us, me, yourself, and Kushal, we have built companies, we have sold companies, we have worked at VC firms, we have invested in, like more than 50 companies combined. And there are 3, 4 things that we believe in, right? One is that there's no one way of building companies, right? Whatever media narrative has been set up that the only way to build companies is you go and do an angel round and then a series A, B, C, and the VC route is the only route to build companies. I think that is not true. Like, there are many different ways of building companies, and we gave the example of a bunch of companies in the beginning. They're all glaring examples of that. There's enough and more. I think there are more than 70 companies which have been built by venture builders or venture studios, which are really successful billion dollar plus companies. So I think that myth is totally sort of debunked. The other thing that we believe in is that this is the first time in the history of software that domain experts can actually build tech companies, and especially AI companies. It is possible because, one, it is easier and cheaper to build technology, and also with platforms like Gaia Ventures, you have a partner which can help you ideate and build the engineering platform and the AI engines and so on. So that is that. The third thing we believe in is that sales and marketing actually has become even more important than ever before. Now, I think distribution is the hardest part, because you could use cursor and code IDs and assistants and some engineering effort to build and come up with products. But how do you sort of convince the customer, especially in industries like the ones that we are focusing on, like financial services, commerce, enterprise productivity, where you are dealing with companies who cannot take a vibe coded product? They need production level things which have been evals have been done, testing has been done, the data is going to be taken care of. So it's very important that I think domain expertise plays a very important role. Like people just, as they say, right? Bankers buy from bankers much more easily than they'll buy from anybody else.
Oh, absolutely. Yeah, that's really true within a number of industries, and that's where you can have an unfair advantage as an industry expert, as someone who's got domain expertise.
Right.
It's.
What else do we believe in, Vijay? What else do we believe in?
I think we believe that there's three really interesting areas that are changing in front of us right now, and those are, as you pointed out, fintech and financial services. The second is in what we could call enterprise productivity, which covers a lot of industries that have really complicated ways of structuring data and telling people to do things, where AI has a big role to play. And that can cover healthcare, cover law, it can serve professional services, and a whole number of different areas. But that is like really interesting because it requires somebody to understand what actually goes on in your business in order to address it with AI, which will happen. But again, it provides an unfair advantage to domain experts. And the third area is commerce, because we see it as very data-centric and really integrated to a number of other fields. So retail to payments to connecting to supply chain and logistics. And in an age where all those things are feeling more volatile than ever, we think that more sophisticated tools are going to come into play, and that's where there's a role for AI. The landscape is shifting so quickly, but many of these things will take many years to roll out. And what we know is that in traditional industries, people are barely scratching the surface of what's possible, and they're still getting acquainted with many of the options they have to use these workflows, and in particular, trying out agents.
Right. And to that point, there was a report recently from MIT which said 95% of enterprise AI efforts have failed, projects have failed. What people just went with the headline and they didn't dig deeper. The report also said that these results are coming from the fact that a lot of these were internal initiatives, and we know the innovator's dilemma. We know how hard it is for large companies to build technology and build like really good experiences. A lot of them were internal, and they also said that 67% of the times when they use a third-party AI vendor AI product, it was successful. So again, going back to, I think there's so many sort of misconceptions because of the narratives out there and how the media projects it. I think it is our job to sort of look at it deeper. At GI Ventures, we have this very sort of counter narrative that companies can be built by anyone and they can be built in n number of ways. There's no pattern. Whoever said that there's a pattern of successful large companies, it's like we don't believe in that.
Mm-hmm. Yeah, I mean, we've seen this before. People saying you can't build a technology company outside Silicon Valley, or saying that their meaningful business models have got to be in software, not hardware, or in hardware, not software. Like there's always a pendulum swinging in some direction, and someone who wants to take the argument that it's never going to swing anywhere else. But where we do recognize there is this opportunity is because of what AI does. It takes these different elements and of building a business, and in particular design and development. It democratizes, it collapses the cost of doing that. It makes it possible to start and build things. The hard part is distribution. Distribution is going to get even harder. And so what is your unfair advantage to win there? The path to moat might include data, but data is often, something that belongs to the incumbents. So I mean, that is a question. Do you think that data can be part of the AI strategy for startups to find competitive advantage?
Yeah, I think data is actually one of the most important things right now. If you were to think about like three pillars of building a AI company today, I think you have to build. You have to basically structure the company in such a way that you are generating either you are generating data which is proprietary, and you are basically generating data because the users are using the platform and they are sharing the data, and the way that they are using it, you get all of those inputs, and therefore your platform keeps getting better and better. Or you have to go and partner with incumbents, people, companies who actually have the data. So they will work with you because they need your AI agents, agentic framework, autonomous agents, what have you. But then they basically control the data, and then working with them, you can actually build a solution, right? So let me give you some examples. So let's say in the RIA industry, there's tons of software which is already there, right? Financial planning software, CRMs, and all that. But it's all like it's all over the place. There are different vendors. These systems don't talk to each other, and so there's a problem of how the how the data has to be, how the data flows from one system to the other, how it is fed into one system, what is the output, and then it goes to the another one and another one. One of the things that we started doing there was, first we launched like a couple of AI native solutions, like a meeting bot joins the meeting and does very specific wealth management notes, and then it gets transferred to the financial planning software and CRM. And similarly, we build a document processing engine specific to, again, things like brokerage statements, tax statements, K1s, and so on, which is something that earlier somebody would be punching into an Excel sheet and then transferring the data to a financial planning software or CRM. And then now what we are building there is a customer onboarding journey, which basically takes care of the data flows between the different systems, right? So what is happening over a period of time is that because of all the data that we are consuming, and also the data which is generated by the use of our platform, we are able to do reinforcement learning based on that, and so our system is actually sort of improving over a period of time. And that is like one way of sort of dealing with data. It's very, very important. And the other way that I have seen is something like what Harvey AI did. They basically said, like, we will go and partner with law firms, and just not like small mid-sized law firms. They went after the top 100 law firms and somehow magically were able to strike deals with a lot of them, work with them, and they are basically feeding, like they are basically consuming it directly from the hose, right? These are like largest law firms with thousands and 10,000s of cases. So that is the other way. And yeah, to your point, absolutely important to figure out your data strategy.
Yeah, yeah. I think that's really useful for anyone building today who knows my models need to get better. I need to keep training. We need to be smarter, and also we need to have ways to keep our customers because data creates the stickiness when it comes to retention.
Yeah, because GPT-5 is great, and all these foundational models are getting better. I would not bet against them, and they have worldly knowledge. They have been fed on, like, everything is out there, from books to Wikipedia and GitHub and Slack and Reddit. But then the biggest thing is that when you're talking about vertical AI companies, when you're talking about, let's say, something in compliance, let's say FINRA compliance, then you need to basically have very specific data, and you need to build something which can solve that very complex workflow. Otherwise, what we have seen, the MIT study also said that in a lot of cases, what they explained that a lot of failures were caused because you were using generic foundational models and was expecting that it will give all the answers correctly, but the models hallucinate, And the vector search, Google just published a paper that it has some issues. So you still need a lot of stuff before and after AI as well, right? For example, you need to understand systems engineering, you need to understand evals, you need to understand to test these systems. And just in the older world, we used to write those test cases and do the testing. Now, I think evals are very important. You need to do create like hundreds or thousands of cases where you say if the input is A or the question is A, then what should be the answer and how far, what is the deviation. And then now our CTO Kushal basically is implementing things like LLM as a judge, right? So it's not just important to get the output from the LLM, but you also have another model or another AI engine which is acting as a judge and is figuring out whether the output was correct or not, and sort of scoring and marking it.
Yeah, and that's very powerful because that's how you actually build products that people trust, that they find reliable, that they refer to others,
Yeah,
that creates that engine for growth.
yeah,
I guess
yeah.
a final question is, when we think about some of the exciting AI companies that are getting headlines now, which are small teams that are able to generate millions and millions, sometimes tens of millions of revenue in the matter of like a year or maybe just months. You know, where does this end, and where can we see bigger, faster, leaner teams? What's possible?
Yeah, I think it all started with horizontal use cases like coding assistants and coding IDs has been the biggest, most successful, has generated the most amount of value between Cursor, Lovable, Weblet, and so on. And then now it is going more into various niches within traditional industries, what we call as vertical AI companies or B2B companies. The reason for that is very simple. Like if you think about coding, there are like 10 or 20 dominant languages, the format, and things, for a particular language, let's say like Java or Python, there is a syntax, right? Like you know how to write that code. And a lot of this data was there on GitHub, just fed into the foundational models. And so the output, because the entire thing is so structured and there was so much of data and there are like defined syntaxes for languages, it was easier to nail that use case, and the output is very, very reliable and it works most of the time, right? So those were the first ones, right? So if you think about it, I almost feel like people have to just follow the trend of reliability and production level software, production level AI software. As models are getting better and as we are able to build very specific solutions in niches, automating complex workflows, and a lot of data is getting generated in those areas, you will see more and more reliable systems and production level systems to those complex problems. Harvey AI is a great example, because they got access to all the data. One of the reasons was the co-founder and the main founder of Harvey AI was a domain expert. He came from the law background, and so he knew a lot of stuff right from the start. And so yeah, that's what I feel like, as these AI systems automating complex workflows in these niche areas, the reliability improves, and we have systems that can be deployed at a production level. I think that's where the biggest opportunity lies. And it could be like you will see like things which are not possible before because the technology was just not available before. Now AI makes it happen. So things that we always thought were not possible, right now we will see very, very niche areas where probably $1 billion company can be there.
That will be really interesting. These niches that were previously thought as too small can be uh, unlocked, and they can grow to be very big because of what AI can do, what agents can play as a role, and yeah, that is, I think, a place for experts to go and explore, and for studios and other types of folks who are serious about and committed to those spaces to support them.
Right, it's all very exciting. And it's yeah, it's a very interesting time to be building in AI space. Thank you so much, Vijay, for your time. It was
This was
super
awesome.
interesting
Of
conversation.
course. Yeah.
And let's do it another time as well. But thank you so much, and looking
This was a
forward to.
blast. Yeah.
Yeah,
Onward.
great.
Thanks,
Thank
Amit.
you.
Cheers.
All right. Bye bye.
Bye.